And welcome back to Waves Now. Obviously, with the economic downturn of the last year or 18 months or so, a lot of businesses, a lot of owners perhaps, have even thought about closing shop, perhaps merging or being acquired by someone else. What's the state of that situation going into 2024? Joining us to talk about it is the CEO of the Tenney Group, Spencer Tenney, as he joins us now from Franklin, Tennessee. Spencer, thanks so much for joining us. And we saw a lot of action in 2023. What's it look like here for 2024?
Well, as you said, it was a very interesting market for M&A. According to Capital IQ, some big headlines, but what the data says is that the total value of transactions was down 82% compared to 2022. And the total volume of transactions was down 33%. So said in a more simple way, there's 2/3 of the deal and they were much smaller than what they were in 2022. In 2024, we think that's going to level out quite a bit. We don't need ideal conditions for buyers and sellers to get deals done. We just need them to be stable. And so as a freight market slowly recovers, as interest rates stay flat or maybe even decrease, we think there's going to be a lot more transactions, and they're probably going to involve much smaller, mid-sized type companies.
So as you look at this situation, you kind of alluded to my next question in that answer, but as you look at it, where are the areas that we should be focused on if we're looking at M&A, again, small, mid-sized carriers and so forth, but are there any specific areas, even inside the industry in and of itself, that people need to be aware of?
I think all of your niche expertise type, the folks that have insulation from the spot market, they're going to be very hotly pursued, just as a way to create and to mitigate risk across broad growth strategies. And so we saw this in multiple transactions that we were a part of in this past year, where they were significantly outperforming the competition or the market as a whole because of their insulation from some of these macro factors. And as a result of that, folks were leaning in and investing as part of de-risking their business and creating a more sustainable future. We expect more of that in 2024 for sure. So, things like final mile, chemical haulers, we expect some major activity in those areas. All forms of bulk hauling, we expect some major activity. And then if there's specialty brokerages, probably less general brokers, but there's some specialty component, we expect those to be in high demand.
So you and I have talked, and one of the things that comes up, especially in M&A, is the fact that if someone's willing to sell, it's because maybe they're tired of it, or they want to get rid of it, or they're looking to get out. As you see this, the economic turns that we've had here recently, obviously the economy in some ways picking up steam. In some ways, maybe it's a shell of what it could possibly be. What are you looking at in terms of prospecting forward, and how these owners and how CEOs and how these boards are perhaps looking at the prospects of M&A, if that is indeed on the table?
Well, this is a key prediction for us in our 2024 annual report, which we're releasing on Monday, by the way. Mm-hmm. What we believe is there's going to be a 10-year high of sellers that begin the process of exiting. And a lot of that's because of fatigue, that goes back even to 2020, and some of it's just the headwinds. They just don't want to deal with it anymore. Now, the good news with that is, along with that, there has never been more active acquirers in this space. And according to ATRI, there was a increase of 21.3% cost per mile per truck in 2023. And so there's not a whole lot of ways to organically offset that pressure in the market. So we think that there's going to be a wide and aggressive audience for all of those sellers going to market for the first time. And so that's just going to be a big part of that activity in 2024.
How attractive is that going to be to buyers? Again, noticing obviously everybody's going to be affected by that cost per mile increase, but how attractive is that going to be to a buyer essentially in trying to grow their fleet if that's what the end goal is?
Well, I think what the deal is, there's not a whole lot of options. It's either going to have to double down or exit yourself effectively, because those aren't sustainable type cost increases. They have to figure out through scale how to create those synergies. And so, the interest rates, the issue with the interest rates right now, the historical context, we've seen interest like this many times. What we didn't see, and what we haven't seen ever, is how fast those interest rate hikes took place. And that understandably kind of froze the market on the first half of 2023. And so now that conditions are more stable, that increased cost of capital pales in comparison to just absorbing the increased cost within the industry itself. And so we think that will just be a decimal point as people work aggressively to offset these things and to be a much more sustainable business.
How does that change in the Fed if they say perhaps they start to look at lowering interest rates? Because generally, when we've seen them raise, obviously we haven't seen them raise this quickly, this fast in the past. But generally, when they've come off of them, they've come off of them very quickly as well.
I think it's going to produce tremendous confidence. I think that the reason why we had such large and so many deals in 21, 22, I mean, debt was effectively free. So I don't think we're going to get back to that situation, but there's going to be enough of a boost where we're going to see some exciting transactions, and it's going to give license to folks who have wanted and needed to activate acquisitions as a part of their growth strategy. It's going to give them license to aggressively pursue deals that they've wanted to for several months.
Well, obviously we want to do things well and we want to do things right, but all of a sudden we also are following a court case, unfortunately, where this is kind of a case where you just don't want it to be in this kind of situation. Of course, Forward Air and Omni are still going at it here in that merger / divorce / annulment / merit. Who knows what this is at this particular point?
Right.
But what's your take on what's going on there? And obviously they've got a court date coming up here.
Yeah, I believe it's today. And so this is one of the things that I think it's part of M&A, and I think that these, unfortunately, this doesn't look good. I don't see a lot of positive outcomes on the other side of this, one way or the other. And I think there are some takeaways for folks as it relates to, kind of the narrative here, as far as when you're getting in diligence and you're trying to report and you're trying to make projections. It's just very important that there's clear communication back and forth to make sure that everyone is accountable and on the same page, because I guarantee you no one wants to be in this situation. And so, for those that are in other transactions, just make sure there's proper documentation, communication, redundant communication across the board, because anytime there's a downturn in the market, there's certainly going to be some adjustments about projections that could affect the overall total consideration of a deal. That's a very normal thing. Just need to make sure that communication's clear, it's documented, so that everyone can move forward constructively. And obviously this doesn't appear like that's happening right here.
Yeah, that's definitely, we'll hear from Todd Maiden about what's going on up there in Delaware Chancery Court, hopefully later today. There's, well, at least they start that trial today. So as you look at this situation, one of the acquisitions that I think we certainly at FreightWaves got caught off guard by was U.S. Express and Knight Swift. That was last year, of course. Looking forward, is there a chance that we may see another blockbuster like that when you have a large carrier or a very large brokerage try to go through an M&A process?
I don't think that we're going to see a ton of them, but I do think that we'll see a handful. And the reason why is because of all of the market pressure right now. There has been a conditioning for all parties to have a more clear meeting of the minds on value. And that's been, it's been very difficult to get buyers and sellers, especially on large deals in the same universe as it relates to valuation over the last, call it 3 years. I think there's a chance for some really exciting things this year because of that. Buyers have some restriction around cost of capital, and I think that it's been very public. I think sellers understand that. And there's some very specific pain for both parties that I think that through collaboration, they can solve a lot of problems, have a meeting of the minds on valuation, and transform the competitive landscape of our industry here. So I'm optimistic that we could see some really exciting type deal announcements. So
you've got your annual report coming out on Monday. How can people get a hold of that and get in touch with you?
Yeah, just go to our website, thetennygroup.com, or you can just follow me on LinkedIn, Spencer Tenney, and we'll circulate it that way. But we hope that it's gives some insight to our rare lens into serving business owners in that 20 to 300 million annual revenue, giving some takeaways about offers that we're seeing, how they're structured, and also some hot takes on some of the deals that we saw this last year.
Could be a good piece of information to have, especially if you're in the space. Spencer Tenney, CEO of the Tenney Group, thanks so much for joining us.
Thank you, sir.
All right, we will take a short break and come back with more Freight Waves Now after this. Stay tuned.